Hi everybody. Today we're going to talk about the share guide page on your newspaper. It applies not just to newspapers but also to, nowadays we have these quote pages, Yahoo Finance, Google Finance, Amazon, there's also like Bloomberg, etc. So you have a number of basically general finance pages where they talk about shares. And we'll cover some of the aspects or some of the jargon used in these pages, make these a bit clearer to the average investor. Now, why do you basically want to look at these pages? Because they give you information about share price moves as well as the history of that share. But remember, this is not a real valuation. You aren't looking at a proper valuation about the actual value of a particular share or security. You're looking at just the share price movements as well as some indicators as to how it's performed in history, as maybe some basically gleaning of valuation. But to do a proper valuation, you probably have to do the things we talked about in our last webinar on valuing shares. Okay, the first thing we're going to cover is the symbol or ticker. In South Africa on the JSE, we have a unique three-letter symbol. For instance, SOL is Sasol, EXX is Exaro, KIO is Kumba. These symbols basically are identifying letters or symbols for every particular share. Internationally, we have symbols used as well, but they vary in length. For instance, Citigroup has just a C. Facebook has FB, 2 letters. And Alibaba, which was recently listed, has BABA, B-A-B-A, 4 letters. What generally tends to happen is that you'll find that these particular symbols are used across a number of platforms. So, for instance, if you have access to Bloomberg or Reuters or basically your trading program, typing in SOL or EXX will bring up Sasol or Exaro. Similarly, if you're international, you type in C, you'll get Citigroup, or FB, you'll get Facebook. These symbols are constant, and if they do change, there has to be an announcement surrounding that as well. Next, we have the high and low for the day. This is self-explanatory. It's the price range for the day, the highest and lowest price of a particular share. But what's important about this particular indicator is it gives you an idea as to the volatility of the share. Volatility is basically how much it moves about. How much change can you expect from the particular stock? A large percentage range, for instance, if you see a share that's worth 100 rands going up and down 10 rands in the day, it generally corresponds to a higher level of volatility. A 100 rand share that goes up maybe 50 or 60 cents a day, you'd think that's a lower level of volatility. Now, just one thing to be aware of here is that this applies generally to larger shares. For some smaller shares, you'll find that often there is maybe just a single trade or maybe no trade even for a particular day. In some cases, you'll find just one price traded the entire day long. It does not mean that this is a low volatility share. It just means it's a low liquidity. It has it has very little trade occurring in that particular share. When you use basically the trade or the price range of the day to determine volatility, it's generally better used for larger, more well-traded shares. Now, there's a term called fat fingers. Imagine if you have a very fat finger and you press a button on the keyboard. Sometimes your finger is so fat you might press another button next to it. And this is a term that traders use to basically describe an event where somebody makes the wrong trade. I personally, a while back when I was very young, made a trade on Kumba. I wanted to sell Kumba shares, 500 Kumba shares for about 250 rands. Instead, I sold 25,000 shares for 5 rands. Luckily, it was Kumba. It was a very well-traded share, and I only managed to move the market down about 2 or 3 rands. But still, I did it for 25,000 shares. So we're talking about a loss of 700,000 rands. This is a fat finger. Be aware that this can occur. So sometimes when you see a really low or really high price for the day, it could be due to a mistrade that might have occurred. Now the high and low for the day is often represented in a candle chart. We've heard the term candle charts, wicks and shadows. Here's an explanation of just what's happening in that particular chart. This here is a candlestick. The green one would be an upward move. The red one is a downward move. The body of the candlestick, the part that's green, would be the distance between the open and close price for the day. So the bottom towards part of the green would be the open, the up part would be the close. But the high and lows are different from the open and close for the day. So you could find a share that has a very small gap between the open and close, maybe 1 rand or so, but a huge gap between the high and low, maybe it's in the region of $10, showing a high level of volatility, but even though the share in the day may have not have done much in terms of an actual price move. Sometimes you can have no actual price change in the day because the opening price will be the same as the closing price. But in the day, the share may have moved quite dramatically. And for the chartists out there, you know that you can find quite a lot of information out there that attempts to draw some information about future price movements determined by the shape of these particular candle graphs.